IFSC. Now, interestingly, from a FEMA perspective, right, from an exchange control RBI perspective, any person that sets up a unit in IFSC is treated as a non-resident. Okay, which means that any transactions undertaken by a person in IFSC with anybody outside India does not come under the purview of FEMA, right? So your pricing regulations, your reportings, your other various conditions, right, for any transactions which would apply if you are dealing from India with that offshore person will not apply if you are dealing with that same offshore person sitting out of IFSC, right? But important to note that because IFSC is a non-resident for FEMA purposes, any transactions between India and IFSC will be subject to the same exchange control norms, right? That is one thing. And other thing which is very interesting is that in the domestic land, that is in India, there are four main regulators which kind of regulate your financial services ecosystem, right? One is SEBI, then RBI, the PFRDA and IRDAI, right? Now in GIFT IFSC, all these four regulators have kind of given their powers to one single unified regulatory body, which is the IFSCA. So anybody who wants to set up a business in GIFT City, in GIFT IFSC, needs to kind of seek registration with this regulatory body. And this is basically the International Financial Services Centers Authority, IFSCA. Okay, now that we know what is Gift City and what is IFSC, right? Now, quickly, let's just go over what are the highlights, right, of what is there in Gift City currently. As you can see, there are more than 670 registered entities with IFSCA. Coming to fintechs, if you see, there are 55 plus fintech entities already registered in IFSCA, out of which around 9 or 10 are direct authorizations, but the rest of them are under the sandbox regime. We'll get to what is direct authorization and sandbox in a bit, but I mean, this is just to give you all like a quick overview of how it's looking like today, right? The transaction volumes are significantly increasing, and it's a pretty upward trend, and it's upward and it's fast growing now, right? Because a lot of awareness is now already there about Gift City. Now that we know what is Gift City and what it intends to do, right? It's very important to also understand that because it's a financial services center, there are only certain activities which are permitted to be undertaken on this in this Gift IFSC. These on your screen, as you can see, these are the permissible sectors: banking, fintech, finance companies, fund management, ship leasing, universities, capital markets, and the likes, right? So these are basically all the participants in the financial services ecosystem which are required to basically thrive, for a financial services ecosystem to thrive, right? And as you can see, fintech is one of the permissible sectors. Let's just quickly go over what are the benefits, right, of setting up in Gift IFSC. The first one is basically a 100% tax exemption, right? The most popular tax holiday. This basically means that any business income that the entity earns is fully exempt from Indian income tax for 10 out of 15 years. So, if you have set up your business today, you can select a period of 10 years out of the first 15 years where you can opt to take this tax holiday. And one more thing to note is that these 10 years have to be has to be consecutive 10 years. It cannot be there cannot be a gap in the middle. One another thing is that MAT is applicable at 9% versus the 18.5% on domestic land. GST, STT, CTT, stamp duty, all that don't apply. Then also there is no risk of any treaty benefits denial, right? Because as we mentioned on the previous slide, anybody who sets up a business in Gift City is treated as an Indian tax resident. So the tax laws that apply to this entity are that only those of from the Indian Income Tax Act. So there is no treaty of with any other country that needs to be relied on. The law clearly comes directly from the Indian Income Tax Act, right? Any withholding tax that is done on interest paid out on debt instrument is also at a lower rate of 9%. Then there is a very competitive tax regime for funds, right? Your private equity venture capital funds who set up in Gift City. This kind of puts them at par with the Singapore, Mauritius, and the likes. There is also a lot of incentives given under the Gujarat ITITES policy, which become applicable as the GIFT IFSC is situated in the GIFT under the state of Gujarat. My colleague Gaurav will take you through those in the next slides. Other benefits besides the tax benefits, right? It's a unified regulator. You don't need to deal with multiple regulators. There's only one regulator for all business activities. So a lot of cross-functional businesses, right, which require possibly regulations with two or more regulatory bodies is kind of done away with. You get a non-resident status from an exchange control perspective. Cost of operations obviously is much lower than other IFSCs, and it's closer to home, so easy to like kind of come in to visit Gift IFSC. The social infrastructure, physical infrastructure is also really, really upcoming. There are plans to increase this 886 acres of land to more than 3,000 acres. So it's upcoming. It's new, and it really is pretty lucrative for businesses to kind of at least be aware and do a use case analysis of whether it makes sense for their business to kind of set up shop in Gift IFSC. Now that we know like an overview of what is Gift, what is IFSC, and what are the main benefits, I think let's dive into the fintech regime, right? The fintech regime in Gift City was introduced in the year 2022, and the framework that came along with it. Um, as we mentioned before, right, there are more than 55 entities which are already present, fintech entities. Okay. Now, when we say fintech, right, it is very important to understand that in the under the fintech framework, fintech has been kind of defined to mean two main sub parts, right? One is fintech, which is basically all your Paytm, Zerodha, Bharat Pay, Cred, all these, right? Which basically are technological solutions, which kind of financial services, which kind of use a lot of tech, right? And the other interesting one is a tech fin, right? Where basically um, uh, entities which kind of provide technology support to other financial services entities. Right now, this includes your TCS, Wipro, all these, right? Like for example, Infosys has an app, has a banking platform called Finacle, which is widely used by banks, right? So that falls under TechFin, right? So this opens up a large avenue for these kind of players to kind of look at Gift City because it's a great use case for them. Okay, now applicants who can apply, right? Basically, Indian or foreign applicants may apply to IFSCA for a license to operate in Gift IFSC. There are two ways to apply. One is a direct authorization, and the second is a sandbox. Okay, a direct authorization is when you already have like a deployable solution, then you can go for a direct authorization. And a sandbox is where you don't have a deployable solution yet, you're looking at testing it and all of that, and we'll come to the sandbox in the next slide. But basically it allows you to test your product before you launch it. Okay, now coming to direct authorization, two main things. One is that you need to have a deployable solution, and you need to have a revenue earning track record of at least one in the last 3 financial years. So any of these fintech or techfin entities which meet these two eligibility criteria may directly apply to the IFSCA to kind of directly start doing business in IFSC. Important to note that when you do set up a unit in IFSC, you can serve your clients within the gift IFSC ecosystem. So any banks, insurance companies, stock market intermediaries, all of these people who kind of need your product in gift IFSC may take it directly from you in from your unit in gift IFSC, and your this unit in gift IFSC may also provide services to your global banks, global BFSI entities, right? Setting up in gift IFSC and providing services to non BFSI global clients is currently not permitted. Your clientele has to be within the BFSI ecosystem. Okay. Uh, Now, what all is permitted? Okay, so I'll just give you all a minute to go over this slide. So we have split it into fintech and techfin. Under fintech, it's further broken down into three main sectors. One is your capital market and fund management, then insurance and banking. Okay, so your wealth tech, your sustainable finance products, trading platforms, insurance tech, digital lending, all of that kind of comes in fintech. And your tech fin is basically your agri tech, reg tech, other kind of solutions for the BFSI sector. Okay, so these are the permissible activities which fintech tech fins have to basically kind of fall under one of these to be able to apply to IFSCA. Now coming to sandbox, right? We discussed briefly in the earlier slide. So IFSCA has come out, has a provision for a sandbox, which kind of allows you to test your product before you kind of go live. Okay, there are four broad sandboxes available. One is your regulatory sandbox, where you can do testing on live data. Then there's an innovation sandbox, where they will give you past market data, on which you can kind of test your product. The third is IORS, which is your interoperable regulatory sandbox. This is more for hybrid financial product and services, and any foreign fintechs kind of seeking India entry, right? They can kind of look at this sandbox. The fourth is your ORRM, which is your overseas regulatory referral mechanism. So basically, the IFSCA has signed a lot of MOUs with multiple countries, right, to kind of allow fintech techfin entities to kind of work with each other. This sandbox is for these kind of entities where they want to basically utilize the MOUs that have been signed by IFSCA by various countries, right? So cross border payments and all of that will kind of come here. We've also given a couple of examples of people who are already present in the sandbox as available on the IFSCA website. Now, this is the main slide, right? This is the main crux, right? What's the use case, right? And how, what you need to know or what you need to evaluate to see whether gift IFSC kind of makes sense for you, right? So we've tried and made a small diagram around it, where an Indian fintech or a techfin entity, right, can set up a unit in gift IFSC. It can be a branch or a wholly owned subsidiary. That branch or wholly owned subsidiary can basically provide services to clients within gift city and also global BFSI clients, right? And payment may be received directly in dollars. There is no need to convert to INR. And employees can be either hired locally from gift city, or you may even look at moving few people from wherever you are based out of in India, right? Key benefits here are basically your 100% tax exemption, reduced MAT. This entity, this unit in gift city remains a non-resident for FEMA purposes. You don't have to pay GST on services provided within gift city and outside India. And you also get a lot of state subsidies, which are your ITITS policy, which will come in the next slides, right? So this, I think, is key for everybody here to kind of note and kind of see, take it back and see whether 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 it makes sense, right, to even evaluate, right? The cost to set up in gift city is slightly high, so whether you have a cost benefit analysis there is imperative, right? Now I'll hand it over to my colleague Gaurav to kind of take you through payment services and other slides.
Hey, hi everyone. Thanks, Priya, for the introduction. So I'll just take you guys, to the payment services regulations that have been released by IFSCA. I'll just wait for a moment if anyone has any questions, with whatever we have just spoken. If not, then I can just move forward. Okay, I think I'll move forward and then, we can take the questions towards the end. So IFSC actually came out with the payment regulations in January 2024, and that was primarily to regulate the payment services, global services, payments going in and out of India, and also allied activities. Now over there, actually, there are five services which has been there are five services in which this has been bifurcated. The first is an account issuance service. So what happens in the account issuance service is that it primarily monetizes if you want to issue an account, and if you want to store any e-money into that account, then that is one sort of service which businesses can provide over there. The second is cross-body money transfer service. The cross-border money transfer service, like the name suggests, is about facilitating the transfer of money to and from IFSC. Now, this space is actually getting a lot of focus even from the government and even from GIFT IFSC. Also, a lot of the payment services that are being registered, that are planning to register, have, primarily work in this sector. The entire goal over here is to kind of make international remittances seamless. Even there are a couple of companies which are setting up what you say a multi-currency real-time settlement system. So a lot of traction in this space. The third is the e-money issuance service. This service primarily focuses on issuing e-money to users. So you can consider them as like your wallet, wherein there's an electronically stored money, and because it is in gift IFSC, so it will not be in INR. It will be in the 12 foreign currency, which has been recognized by IFSCA. It's a prepaid card, and you can use it for transactions, within gift and even overseas. They've also come out with an escrow service, and it's just basically to hold money, and for parties involved in a particular transaction. Then there's a merchant acquisition service. This is a service which you can offer to a merchant for collecting payments from customers and ensuring that the transaction is smooth. It's like a POS machine how we have locally in India. We'll be covering the detailed process about how do we set up a fintech in the later slides. I just wanted to cover the process of setting up PSP in this particular scope because it's slightly different than how you normally set up a unit in Gift IFSC. So what happens over here is that you are mandatorily required to incorporate a company in IFSC. That is the first, most important thing. There's no LLP, no branch structure, which is kind of formatted here. So what essentially happens is that the parent company needs to file an application with IFSCA, giving them an intimation that we're trying to set up a payment service provider, give them all the regulations, give them the front end, back end software, and the technicals around this. Now, once IFSC is primarily okay with the business model that you're trying to use, and they're okay that the fund IFSC ecosystem will benefit from this, they will give you an in principle approval. Now, when you receive the in principle approval, only then you are required to incorporate a new company. That will be like one of the conditions for setting up this payment service provider. And after that, you just need to comply with a couple of conditions. You'll need to get a technology in place, hire employees, and based on the conditions specified in the in principle approval, you'll be granted a final approval. Now, coming to the type of PSPs, the PSPs are distinguished into two primarily sectors. One is like a regular payment service provider, and one is a significant payment service provider. So regular payment service provider, if you're not giving the e-money issuance service, it is mostly distinguished based on the average turnover of payment transactions that you kind of carry out. So, like, if you see this slide, right, if you are if your average monthly turnover, right, payment of the payment transactions is less than $2 million for any one service, or $4 million for two service, then you'll be a regular payment service provider. And if this volume increases, then you'll be classified as a significant payment service provider. Please note, you cannot apply to be a significant payment service provider. It's actually granted to you, once IFSC says, that you're crossing that threshold, you just need to tell them, that, hey, we've breached this. And they'll designate you as a significant payment service provider. So everyone starts off as a regular payment service provider and gradually moves on to be a significant payment service provider. Now, what is the main, difference? How does it make a difference to you? Is that if you're a regular payment service provider, right, you have a net worth of $100,000, which you need to increase to $200,000 by the end of year three. Now, if you have been classified as a significant payment service provider, then you are required to have a minimum net worth of $250,000, and this needs to be done within 90 days. So suppose, like, if you're at 100K now, and if you immediately cross it in the second or third month, then you need to immediately up that net worth to 250K, and you will only get a time of 90 days for doing that. And by the end of the third year, the significant payment service provider is required to have $500,000 as net worth to continue giving those services. Coming to recent, just a couple of recent updates. So IFSC is also seeking comments. Actually, the time to give comments are over. They've come out with a consultation paper for setting up a payment systems in IFSC. It is very similar to the Payment and Settlements Act. That's the idea about it, which we have, governing in India. Okay, so in the next few slides, I'll just be covering the incentives that you, as a fintech or a tech fin, what are the incentives you have if you move to Gift IFSC. So the first is the fintech incentive scheme. Okay, so I'll just pause at this slide. Maybe you can just take a screenshot, and I'll also go through it. So first is more of a startup grant. It's more if you're like developing a new product or and related go-to-market initiatives. That's around 15 lakhs. Then they have a proof of concept grant that is around 50 lakhs, and the conditions are that if you're conducting a proof of concept for an early or a mature fintech entity in the domestic market or overseas. The third is the sandbox grant, that is essentially to an incentive for you to come up with innovative products or services. Okay, that's around 30 lakhs. Then there's a green fintech grant, because the government and all, everyone is focusing a lot on sustainable finance. So if you are developing anything, any solution for sustainable finance or sustainable linked finance, including like ESG investments, you have a very high grant of 75 lakhs. So that is something which people in this space should look at, because if you develop this particular product, if you're developing a global product, so it would make a lot of sense for you to move to Gift IFSC and develop it over here. Then there's an accelerator grant. This is essentially for accelerators who will host a lot of startups and develop the environment as such. Then there's a listing support grant as well. Now that the direct listing framework has been come up in IFSC, right? So any fintechs who are like looking for a secondary listing in the IFSCA market, once it's completely operational, can actually explore this grant and get a incentive from the government. Then we come to the IT/ITES policy. While Priya, might have spoken about it earlier in brief, I will just take you through the entire, take you through some of the key benefits in detail. So over here, the Gujarat government is essentially giving you capital expenditure subsidy and operating expenditure subsidy for setting up your IT/ITES unit. So essentially, fintechs are a subset of IT/ITES for setting up your IT/ITES unit in Gujarat. So, since GIFT is also inside Gujarat, you will continue to receive these benefits. There is a huge capex support, which is capital expenditure, OPEX support offered by the government. Apart from that, there are also incentives for you to, for instance, there's an employment generation incentive wherein if you create new and unique local jobs in the state, you get 50% of 1 month CTC as a kickback. Then also there's Atmanirbhar Gujarat Rojgar Sahay. That's essentially for a provident fund, whatever that you're paying. For female is different and for male is different. The government kind of covers it for 5 years. Then there is an interest assistance. If suppose tomorrow you're taking like a subsidy, you're taking a loan, right? So you will get it at a subsidized rate of 7%, which is fairly, it's as much as a home loan. So that's fairly good for these. Now I'll just cover the process for setting up. Okay, so the process starts with that. First, you set up a meeting with the regulator and the gift officials to kind of demonstrate your use case. So, what essentially this does is that this gives you and the regulator a good opportunity to kind of discuss things through and how the business was essentially fit into the IFSC ecosystem. Once this meeting is done and you think that it's a good use case and you should go ahead, then you will need to identify an office space in Gift IFSC. Once you have identified, a gift office space, then you enter into what is called a provisional letter of allotment. Now, this is the most important document from a setting up perspective because this document forms the base of all the applications and registrations that you will be taking till the time you reach the final, till the time you get the letter of approval. So once you have the provisional letter of allotment, right? So based on this, you submit an application with the administrator IFSCA. That's the SEZ application, and you submit a application for getting a fintech license with the IFSCA board. So one is an SEZ approval, one is an IFSCA license. Now both of these move parallelly. First, there's a unit approval committee meeting. This is done by the SEZ, and what happens over here is that they ask you a couple of questions, about what your business is, what are your 5 year plans, and how exactly you plan to, develop your business in Gift City. This is fairly formal, and once the entire meeting is done, you get a letter of approval. Now, once you receive the letter of approval, because you've also applied for the license, you will be getting an in principle approval over there as well from IFSCA. Once you have these two approvals, then you're required to comply with some regulations for getting the tax benefits. Like you need to submit a bond, you need to get an eligibility certificate, and other necessary registrations. There's like a registration come membership certificate, IEC, and your GST registrations. Now, once you have got all of this in place, then you apply for a bank account. So there are some people who get confused over here. So the bank account comes into play only after you've received the provisional letter of allotment and you've applied to IFSCA. Getting it before, usually in businesses, what happens is that you open a bank account first. But please be aware of this. The bank account only kicks in very late in the process once you have all the registrations in place. Now, once you have everything in order, then you submit a letter to IFSC saying that you've complied with all the conditions, and they will issue you a final letter of authorization. But once you have all of this in place, then you can kickstart your business operations. We've just created a small indicative cost sheet. So this is primarily for fintechs who are looking to explore. So I'll just pause over here. Maybe you guys can just have a look, and I'll just wait for a minute. Okay, so moving on to Q&A now. If anyone has any questions, you can just post it in the comments section, or maybe you can unmute yourself or raise your hand, and we'll just take it one at a time. Yeah, Sudhanshu.
Yeah, hi Gaurav.
Hey, hi.
Uh, there was a news last month that IFSCA is restricting some family offices from approval because of some RBI concerns and everything. So, if there is a new prop trading firm or a family office that wants to set it up, what will be the process, and is it allowed anymore or it's stopped? Thanks.
Sudhanshu, family offices is something that is currently not looked at because there is a little bit of a RBI challenge over there. There's a I mean, there's a more macro level issue of whether they are wanting people to kind of send money outside India for family offices. So that is something that is currently not in the pipeline. I mean, we'll keep you posted if we hear anything more. And the second thing you mentioned was prop trading, right?
Yes.
Yes, so that I think we have seen a couple of people doing that. You can set up a stock broker. You can take a stockbroker license with the IFSC and do prop trading.
Oh, thank you.
Okay. So,
And
Sudhanshu, just
yeah,
to add on that,
yeah.
right? So, essentially, what type of prop trading businesses that we're seeing over here is that, people who want to get exposure in the global market, right? So, what they're doing is they're opening up, they're taking a stockbroker license, and there's a global access program which the, indexes here run. So, what you get is that you can access like around 115 different countries from this one place. So anyone who's looking to do prop trading and globally, there's a very good use case for that. If you're ever here, you can just meet the. We can help you meet the exchanges over here, and they'll guide you into it. So that's a very good use case currently going on here, and you have no STT, no CTT, so it becomes like a very lucrative business for someone who's into prop trading.
Okay. That's thanks for the clarification. That's nice to know.
Sure.
Okay. Thanks.
So we'll just go through
Yeah.
some of the questions in the comments.
So UD has asked what's the typical timeline for setting up. So timeline for setting up would range typically somewhere between 3 to 4 months. I think that is a good enough timeline to kind of go through all the steps, kind of have a first meeting with the regulator, and make the applications and kind of get going with your business. Praful has asked that is there any timeline restrictions? So no, currently there are no timeline restrictions for Sandbox. People who come in the Sandbox do have a special direct entry route, but they still have to go through this thing. There is no timeline given that you cannot be in the Sandbox for more than so much time. But I mean, pretty much if you feel that your product is not working out, then I mean, people will anyway exit from the Sandbox.
Yeah.
Currently, I don't think there are any exits that have happened from the Sandbox yet.
Yeah, so just to add on that,
Yeah.
so they give you like around 12 months, and then there's a very easy extension that you get. So you have good 1.5 years, and even after that, if you feel that if you need more time, then the regulator is very flexible, and they are very what you say forthcoming. So if you have anything, so there are no restrictions as such. You can easily, there are restrictions, but there are like you can immediately they can be what you say altered as per like your ease and your convenience.
Yeah.
Vivek, you said hi, but we can't actually see your.
I joined the meeting a little bit late,
Yeah, Vivek.
so I just want if you can share the PPT with me, that would be
Yeah, we
helpful.
should be sharing the presentation with everybody. So it will be
Okay,
there for your reference.
okay, thank you.
Got it.
Uh, okay, Yuri. So we just elaborate on that. So what exactly? So see what they're trying to do
Oh,
at
no,
Gate.
no.
No, no, yeah, actually on the incentive scheme. Okay.
Mhm.
Yeah, so what they're actually trying to do at Gift City, right? So they're trying to make it like a innovation hub, okay, innovation and financial hub. Now, for this entire ecosystem to develop, right, they need to have all the players in the industry. So there are a lot of universities and incubators who are currently in the sandbox. I'll just name a couple of you. I think there's an Ahmedabad University, and there are like 7, 8 incubators who are already there in the sandbox. Now, the idea is that for GIFT to develop as a hub, you will need to have fintechs. You will need to have an R&D center, which kind of gets all the innovation done. And for accelerating all these fintechs, they will have accelerators going on, and whatever your university's incubators coming in. So there is an accelerator grant, and you can easily reach out to Gift, or we can help you with that to kind of apply for it. But you'll have to go into the sandbox for that. So it's a very simple process. Maybe you can connect offline, and you can take you through that process.
Okay, anybody else? Any questions? All right. Lovely. Thank you everybody for joining. We look forward to engaging with you guys. Do reach out if you have any other questions besides what we spoke of today. Thank you.
Thanks.
Thanks,
Thank
Varun.